Joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Larry, hello to you. Thank you for being with us. Certainly the energy space, not the headline story coming through today, but certainly oil playing its part nonetheless.
Yeah, people are paying attention to it. It just goes to show you the unstable equilibrium we're seeing in the oil market. Most of this is technical on the way down and technical on the way up. People trying to make excuses for why it's bounced back, but I do believe it's a big amount of short covering. Weakness in the dollar definitely plays into it, but the fact remains that we still have a stubbornly high inventory levels. But I wouldn't make too much of it. I'm glad to see it, but boy, it just seems whenever you have a supply issue, just like iron ore, you get these knee-jerk reactions, these bear traps, these quick moves. So we'll see what happens.
With that in mind, I mean, of course, as mentioned, energy not the key theme today. We did certainly see weakness coming through in the healthcare space off the back of a postponement to that healthcare vote. Technology continuing to steepen when it comes to its slump coming through. Lots of different dynamics going on at the moment, but one of the interesting, I guess, conclusions has been that spike that we've seen in the volatility index.
Yeah, exactly. And you see the volatility index, you know, the VIX trading around 11. You have like the Citigroup Economic Surprise Index negative. I mean, the fact is, we can say whatever we want about today's market reaction, but I think we really have made that transition from a market that's been lifting through all kinds of negative economic surprises, negative shocks, 2014 to 16. Now we're in more of a carrier or a muddle through situation where we are seeing global growth averaging at about 3%. And we're on the heels of maybe having the fourth quarter in a row of 3% annualized growth. And that's the first time we've seen that since 2010.
We look ahead, certainly, when it comes to those second quarter corporate earnings are going to start to feed through very shortly. We have the suggestion coming through from Teddy Weisberg of Seaport Securities yesterday that for him, it is really getting numbers, not feelings, when it comes to where U.S. indexes are set to go from here.
Yeah, and I think he made a very good point. And that said, the U.S., I've been neutral to underweight the U.S. for a while now, not because I don't believe in the United States, but I think we're closer to the end of a business cycle than we are, the beginning. And that's why I remain overweight Eurozone and also emerging markets and neutral on duration in the U.S. I just think we're closer to the end. And people are paying absolutely high valuations for equities here. But on the other hand, it's relative to the return they can get anywhere else.
With that in mind, I mean, talk to me through the strategy that you're employing at the moment when it comes to your portfolio and how you're viewing the global playing field at the moment.
Yeah, right now I'm a little bit nervous because it seems like consensus is starting to have the same trade, and it's really scary to have too many people on one side of the table. But I do, when it comes to interest rates, I'm definitely neutral duration, which would be 10 to 30 years. I just wouldn't bother right now. I think there's more value in high yield credit. I do believe in the Eurozone, and I do think that that's the place to be with regards to the intermediate term. The U.S., if you had to be anywhere, I still think the financials is the place to be. Energy as well, at least the ones that are have gotten beat up so royally lately. Japan, I'm still at weight, and I still continue to like China as the emerging market hero.
Certainly China. We were speaking with Tim Mulholland a short while ago, certainly when it comes to that GDP outlook and also that uptick in industrial profits, this feeding through with some positives for Asian markets at the moment. Larry, unfortunately, we are out of time, but great to have you with us. Thank you.
Yes. Thank you.